I'm Kurt Shimmers. Every day, fortunes are gained and lost in the financial markets. News, trends, and even geopolitical events shape your financial landscape. Join me and my expert guests right now on Traders Nation. You are tuned in to Traders Nation. Thanks for making us a part of your day. Don and I have got a fantastic show. Jason Hartman, he's going to be with us here today. He's an expert in the realty area. We're going to be talking with him about how construction costs are going up. Folks are holding on to their homes because of rising interest rates. Is this a perfect storm for a housing supply shortage? We're going to be talking with Jason about that. Plus, gambling and payment processors are on our list. That should be no surprise to you. Now listen, if you are paying attention, you would be making bank on several of our stocks that we brought to your attention. So we got gas, stocks, news, and a whole lot more. Stay tuned.
Traders Nation. Get Pro Online DVD Trader today. Whether you're an experienced trader or just beginning, you'll improve your skills dramatically. Click on the Knowledge Center button to order your copy today. Traders Nation, delivering what you want when you want it. Traders Nation.
Here we go.
Okay.
Hi, this is Willie Nelson. You're tuned in to Traders Nation.
Oh, talking Willie. Willie Nelson certainly was on Traders Nation. We did an interview with Willie. You know, Steve Ford's, all of them. You can get that over at YouTube. Talk about biodiesel fuel. But today, what's going on today? Payment processors, Don. Holy moly shamoly, Don. Look at, seriously, look at some of the moves on some of these that we've been bringing to our viewers and listeners on Traders Nation for some time. MasterCard here today trading at $193.40, Don. 684K shares exchanging hands here. I mean, what can we say, Don? Up $8 from when we spoke about it last. This is a beautiful chart. Bring up the charts, folks. Classic stair-step climb. Bring it up. Don, what are your thoughts?
Well, in the payment processing business, what can I say? I mean, it's not going away. E-commerce is strong and growing.
Yeah.
These companies are the companies that process the back office, the payments, and they're not going anywhere. There's a bunch of them in here that we've talked about.
Sure.
We've talked about PayPal. We've talked about Visa, MasterCard. We've talked about Square. We've called in Western Union into the fracas. And there's a few more. There's a few more sitting around, but you said it. If you've been watching these stocks, you're in the bank.
You totally are in the bank. You're sitting there fat and happy, all right? And you're saying, give us some more, because that's how addicting it is, folks. MasterCard, once again, bring it up on your charts. Beautiful stair-step climb here today. I'm loving the way this thing looks. Don, you mentioned PayPal. Same thing here, okay? PayPal, $78.54 where it's currently trading at. Beautiful chart. Again, just like MasterCard, stair-step climb. I'm loving it. All right. Resistance on PayPal, by the way, PYPL is sitting around $80, and then
right.
Again at $85. Bring it up on your charts. Don, your thoughts on PayPal?
Well, PayPal's another excellent company doing a great job. Once again, it's e-commerce, and these are the companies that are in the back taking the money. And by the way, I want to introduce one more now in the payment processing arena. PAGS, a stock called Pag Seguro Digital. And here's a $31 stock. PAGS, same business. Payment processing company, a little bit of new technology. It's a foreign company based in Spain, I believe.
Okay, PAGS, put it on your radar. This is a brand new stock for you folks here today. For those that know Traders Nation, you're going to have your pencils out, you're going to have your paper out, and you're going to be writing these ticker symbols down. PAGS is a ticker symbol. A brand new stock here today in the payment processing area that we're bringing to you, PAGS. Papa Alpha Golf Sam. Dono.
Well, just be careful with watching these stocks, and I'll tell you why.
Okay.
They can be volatile. MasterCard, Visa, Square, PayPal, I've been watching them now for the better part of 18 months.
Yeah.
And they can be volatile on up and down days. As an example today, obviously, they're all in the green.
Yeah.
And so, except for PAGS, P-A-G-S. But these are the payment processing business. And by the way, we can discuss other areas that they're in, i.e. the lending business.
Sure.
So
Yeah, absolutely. In fact, Square has a small business division. I mean, they probably all do, I imagine, Don. I don't know. I haven't done enough due diligence on the payment processors since we mostly focus on the consumer side, right? But yeah,
that's correct.
They got their small business loaning divisions and the small business divisions and cater to the small businesses. All of them do. So there's a whole tentacles out there that they're making money in, Don.
That is correct.
All right, Visa.
Visa, yes.
Let's do Visa. And folks, I mean, check this out. Visa, $131.70, up $7, maybe even $8 since we spoke about it to you last time. We told you that resistance on Visa, and then we spoke about it a little before, 124, but the resistance was at $124. We brought it to your attention once again, said, hey, it's got to get through this resistance at 124, and it's got to do it in a big way with a nice tailwind. And Don, did it do it ever? 131.70, where Visa is currently trading at right now. Ticker symbol V.
Yep. These are the leaders that we talk about: Visa, MasterCard, PayPal, and a few others. And then we can move on right to gambling.
Let's do that. Why not, right? Las Vegas Sands, beautiful thing going on here. Currently trading at $79.15, Don. Here again, up again, folks. Bigly. $5 since we spoke about it last. Coming to resistance, bring it up on your charts, is going to be right around the $80 range. Check it out. Don, your thoughts on Las Vegas Sands?
Well, Las Vegas Sands, I mean, one of the leaders in the business, big in Macau, and the other big leader in the business, one of the big hitters, is Wynn, W-Y-N-N, symbol on that one.
Yeah.
And it seems that this stock is back at $200.
What were we saying, Don?
That is correct.
Well, we've been saying this when it was at 203. Steve Wynn fiasco came out, dropped down to 160. We said, hey, it's just a matter of time. The business model hasn't changed. Now it's back at $200. Don, let me ask you, now that it's back to $200, has it resolved itself in the market, that fiasco with Steve Wynn and the allegations? Do you feel that now it has resolved itself in the market, Don?
Well, Steve Wynn is out of the company. All the stock has been sold to two major investors.
Yeah.
So that's all squared away. His wife is still on the board of directors. They're getting that resolved.
Yeah.
She wants more women on the board and to remix the board. That's fine. That'll take care of itself.
Sure.
And then an announcement is out where Wynn is out of the Massachusetts deal. The company will continue to build a resort up there, so they'll have that operation coming online. Sure. And then they're still on track in Japan to get that license and that casino operating.
Yeah.
So at the moment, Wynn is taking care of itself.
Well, listen, Don, I mean, you got to admit, this is probably one of the cleanest cleanups that I've seen on a company and the scenario that what's going on here with Wynn, W-Y-N-N. Don, you gotta think so. It's gotta be. I mean, look they've done all the right things to get everything back in order, to right the ship, and they're moving forward, and they're performing their business as we discussed. They got the key people in place. They did that from day one. They've been doing it. That's what they do.
That's right.
And they run the company, and they do perform their business. W-Y-N-N, put it on your radar. Keep it there.
That's
$200.
Right. That's right.
Very nice.
There you go.
I'm liking it.
And by the way, the ETFs in that sector is doing very well as well.
Sweet.
We've got that BJK. For those who don't understand ETFs, these are baskets of these stocks. But if you take a look at the symbol BJK, there it is, doing pretty well.
Yeah, absolutely. Let's talk about that. We brought that to you on the last edition of Traders Nation, or maybe the one previous to that. Vekos Gaming is the name of that company, I believe. Currently trading at $46.18. Low volume trader, but nonetheless doing well. Beautiful chart on this thing. Resistance at $48.60. I mean, if you look at this chart, bring it up. If you look at this chart, man, this thing's got like a heartbeat to it, which I like, because you got better buy sells when to get in, when to get out, when you want to, right?
Yep.
Because of historical
and then also in this sector, we introduced El Dorado Resorts. ERI is the symbol on that one, and GLPI. Now these companies just a little bit different, obviously cheaper stocks, but GLPI is the stock that bought the properties at Tropicana from Tropicana Resorts and then lease them back. So that's more of a infrastructure in the gaming and leisure companies. It's called Gaming and Leisure Properties, GLPI, trading at around $35 right now. Nice chart on that one.
Yeah, it is a beautiful chart. In fact, it's really solid in this particular area. Folks, bring a chart up on this too. Resistance, you're going to find this around 200-day moving average. Again, a beautiful chart. These are the kind of charts that traders that I like to look for, Don, when I'm looking for stocks like GLPI, and that's gaming and leisure. And that's Gaming, Leisure, Papa International is the phonics for that particular symbol, trading it around, like you said, $35. All right. Okay. There you have it. On the other side, we've got Jason Hartman. He's going to be with us. We're going to be talking about mortgages, interest rates. Is it time to buy? Think about this. Shortage in housing, all kinds of really good stuff. You got to get your strategy together if you're going to be in the housing market. All right, so coming up next, Jason Hartman. Stay tuned. We'll be right back.
Hi, I'm Steve Forbes, and you're watching Traders Nation.
Welcome back. You are tuned in to Traders Nation. My pleasure to have with us here today Jason Hartman. He's CEO of JasonHartman.com, certainly. Jason, welcome to Traders Nation. How are you today?
Thanks. It's great to be here.
Oh, good, Jason. So construction costs are high. Folks are holding on to, and then they're holding on to their homes because of rising interest rates. Is this a perfect storm, Jason, for a housing shortage?
Well, it is definitely a perfect storm for a housing shortage. We've been experiencing a housing shortage for the past several years, but I don't think it's been worse than this in an awfully long time, many decades. I've been through several cycles.
Sure.
And one of the interesting things that you alluded to is how people are holding on to their houses. Now, what's interesting about that is that they have these very low interest rate loans that they got a few years back.
Sure.
And, there's not a lot of motivation to sell because when you sell the mortgage, and the mortgage is a big part of the asset.
Yeah, it certainly is. Interest rates are going up. They have been, right? And they're starting to move, and probably anticipated to go even higher. And I think that's a really good point. People do the math. They're smart, right? They do the math, and they say, hey, this is going to cost me a lot of money to get out of what I have. I must really, really want the next home to move on to afford that larger interest rate and that larger payment, potentially.
You are absolutely right. And just so your listeners have kind of a metric for, there's always people out there predicting a housing bubble too on the other side of the equation. When will these high prices stop? Well, the adjustment has to be rather significant compared to the interest rates. Every 1% in interest rate in mortgage rates equals about 10% in price. So when rates go up by 1%, you need to see a price reduction of 10% on the typical loan to have that be equal.
Sure.
So the simple result is people have to pay more and they get less. That's just the way the supply and demand equation pans out.
Right. Well, you mentioned real quickly, and I didn't want to get into the housing bubble thing, but you mentioned, so certainly it's something worth talking about.
Sure.
Concerns about a housing bubble. A lot of people got stung. I had some properties up north. I had a condo on the beach in California, here in Arizona, and then so I certainly shed my properties because it was a good time. I was going to make money, and I didn't want to be holding on to these properties. So with the housing bubble, people got stung, and some people got stung really, really bad. Have we got enough years behind us where the people have kind of are feeling a little bit not so tender to that sting? Are people still worried about that? Are we going to run into another housing bubble, you feel?
Well, that's the million-dollar question, isn't it? And I always say, we Americans, we have a very short memory.
Yeah.
So, it's just funny how that works. But, I got to tell you, first of all, we have to distinguish between different types of markets. There are basically around the world, around the country, three types of housing markets. There are linear markets, there are cyclical markets, and there are hybrid markets. Now, linear markets, as the name would imply, supply are the markets that just sort of chug along. They don't make the news. They're places that we like to invest. My company helps people invest nationwide. We invest in places like Atlanta, Memphis. Now, we used to invest in Phoenix, but Phoenix is a hybrid market. And so that market is kind of in between the two. The very risky, dangerous markets are places like the West Coast,
sure.
L.A., San Francisco, San Diego, the expensive northeastern markets, New York, Washington, Boston, South Florida.
Sure.
These markets are crazy. They never make sense. They're highly risky, and you got to time it just right, or you're in big trouble.
Well, I was going to ask you what makes them risky, but is it volatility in these markets? It says you better know your market area if you're going to come in and invest in that market. What is it?
You know, in my many decades in this business, I have never met anyone that can accurately predict the cycles. So for my money, being a little more conservative as
Sure.
the years go on,
Yeah.
just invest in the linear or hybrid markets.
Yeah.
Because you don't have to time the market in those markets.
Right.
They will make sense from a cash flow perspective. So when you buy an income property in these linear markets especially, you're just investing for yield. And if overall your yield's going to be somewhere in the neighborhood of 20% annually, heck, what's wrong with that?
Sure.
Just keep it, just sit and be in for the ride.
That's right.
You know, the cyclical markets, if you time it right and you buy property in Los Angeles or something and you're at the bottom of the cycle and you ride it up to the top, you're going to make a fortune, but nobody can accurately predict that. You know, it's just, it's a fool's game.
That's right. I almost don't think that, and I don't know the future. Like you said, it's $1 million question. I don't know if we'll see such a dramatic crash in the housing market that we've seen. Maybe not in my lifetime. Maybe down the road.
I agree.
I don't know if we'll actually see that again. And certainly that was a fantastic buying opportunity. I don't know if we're going to see that kind of buying opportunity now. I think it's going to be like anything else that one may invest. It's you invest it. You think you're in the market and you find a soft spot. You may see some appreciation there, and then you're betting on the appreciation over time is what I'm thinking. And I could have bet you're a linear market guy. All right. So since inventory is slim, what kind of property appreciation can we expect? I know it's in areas. Phoenix certainly is one, but in the national market, it's going to be different from Phoenix. But on the average, what do you think? What kind of appreciation that we may expect?
Oh my God, that's another $1 million question. Well, historically,
that's why I ask them. That's why I ask them. That's why they tune in, right?
You can ask, but I don't know anybody who can answer reliably.
That's right.
But you know, look at nationwide over the course of many decades, most people will tell you, and of course, you know, there are about 400 markets in the United States. It's a very large, diverse country, obviously. But nationwide, typically people are looking at about a 6% annualized average appreciation rate, somewhere in that number when you mix in all the markets. The problem with those cyclical markets is, you know, you give back so much during the bad times. And to your point earlier, the Great Recession that we went through was an anomaly. Okay, there will always be cycles in markets, of course. Typically about every 10 years, you'll have a 3-year cycle. That's commonplace. But you know, that was the worst economy in 7 decades. That was not normal. And this time around, you know, the banks, I would argue that they've overcorrected. They've been extremely conservative. There are little pockets of crazy lending, but nothing like what we had in the early 2000s. They were making loans that you just knew there would be a foreclosure crisis. It was so obvious that would happen. Now, what wasn't obvious, I mean, I predicted that part of the collapse. What I didn't know is what was going on Wall Street, where they were bundling these loans, selling them multiple times. That was all behind the scenes. There were really two punches in that Great Recession. The first one was the mortgage crisis. That was kind of obvious. I knew that was coming. The loans were stupid that they were making. They were completely crazy. But the Wall Street component, I didn't know about that one.
Well,
so
and that's the other factor that you couldn't factor in and a lot of people couldn't because, like you said, these are the types. Let's face it, Wall Street's. I'm in the area. Wall Street gets really creative, sometimes too creative, right? And you don't know how creative some of these things are being sold in the creative market. So not everybody's privy to that kind of creativity, and hopefully
Yeah.
they won't do it again.
And that's a very kind word, creativity.
That's right. That's right, Jason.
I call it criminal behavior, but creativity, sure. Okay, go for it.
That's right.
Love it.
That's right. So yeah, you're right. I think that's what we're seeing. All right, so we're almost out of time. Despite rising prices, do Americans want in, and are there any barriers that they may face? They need to know ahead of time, Jason.
Did you say barriers or
Barriers, yeah, barriers, certainly barriers.
Yeah. Well, qualifying for a loan nowadays is pretty difficult, which leads me, to my last point, to think that there's not going to be another big crisis because these lenders are not giving loans away to people who can fog a mirror anymore. They are much tougher, and the underwriting is much more solid. So,
As it should be. As it should be.
There are certainly challenges.
Yeah, we're out of time. I'm not against that. I think you got to have a little skin in the game. And instead of hardly none like before. JasonHartman.com, JasonHartman.com, where you can find you, right, Jason?
Yep. Thank you very much, JasonHartman.com. We got a lot more there for you.
All right, have a great day. Thanks. Welcome back. You are tuned into Traders Nation. Thanks for staying with us. Hey, real quickly, hey, Don, I want to let everyone know about Pro Online Trader DVD. You know we talked about beautiful charts here today. If you brought charts up and you didn't know what all that meant, get a copy of this because it'll teach you exactly what it is. And it's so simple, so easy to learn. If you've been struggling with it, you got to get this DVD. TradersNation.com. Click on the More button. Get your copy today. Hey, Don, don't trust the cloud, Don. Don't trust the cloud.
That's right. That's right.
What's going on? Cloud data storage is going to be huge. It's huge now. It's going to be bigger.
Well, these we talked about the tower companies, and they've all converted to REITs, AMT, SBA.
Yeah.
And if you take a look at the data center business over in the REITs, we've got 4 symbols we can talk about. That would be DLR, EQIX, COR, and QTX. I'll be talking about them in the future. But these are the companies that run data centers for the Amazons and the Microsofts and companies like that.
Yeah.
And they're storing all the data. And
gotta go somewhere.
I mean, heck, Equinox, as an example, is almost a $400 stock.
Wow. All right. So there's your data center stocks. Don, do you own anything we talked about here today?
No.
Yeah, I don't either, so appreciate that. Don, where can we find you? All the LinkedIn, Facebook?
Don McKelvey at Twitter, Don McKelvey at LinkedIn.
Same here for me. All those social medias. Share, friend, like, all that good stuff. Have a great day. See you on the next edition of Traders Nation.